All right. So, welcome to Property Assessment Division Town Hall. Our presenter today is going to be Paula Gilbert. She's the area manager for Yellowstone County out in Billings. We also have other staff today that may be helping out with some of the questions and maybe some of the presentation. Bryce Kotz, who's our bureau chief, he's here in Helena. Robin Rood is our deputy administrator. We share her with Billings, so she floats back between Billings and Helena. And then Corey Hoffman is our division administrator, and he's in Helena. So we have all of them on the call today. They will be here to support Paula and get those questions answered. We just want to have an open format and get you all the answers that you were looking for and help you understand the property assessment process. Paula, welcome, and thank you so much for having us. And I guess it's you. I think all you have to do is unmute and get ready to rock.
All right. Thank you, Jason. I appreciate that. Forgive me, my voice is a little bit off today. Of course, I've come down with a bit of a cold, but we're going to get through this. So welcome, and thank you all for coming today. It's our pleasure to be here to help you understand your appraisal notice, how your property taxes are determined, explain how we do it, and how that relates to the bills that you'll be receiving in your mailbox. We're here today to explain this process and answer any questions you may have for us. Our mission here at the Department of Revenue under Director Beatty is to be the nation's most citizen-oriented, efficiently administered tax agency. So everything that we do is driven through that lens. Again, my name is Paula Gilbert. I am the Appraisal Area Manager for the Yellowstone County office, which is located here in Billings. I've been with the department for a little over 15 years now. So this first slide is just a map of the state of Montana. And as you can see, the Property Assessment Division is divided into 4 regions as identified by colors. This map is giving you not only the list of those regional managers in those areas, it also gives the area managers as well as their contact phone numbers. You'll notice there are some towns that have the red diamond beside those. And what those stand for, those are our local offices that are open to the public. You can walk in and speak to an appraiser. In Billings, of course, we have our local office. If you look just to the south of us, you'll see that dark line that surrounds Carbon County and Bighorn County. What that means is that those 2 counties share a local office. And in this case, that local office would be located in Red Lodge. This information is located on our website at mt.revenue.gov. So the Property Assessment Division, what do we actually do? We provide the classification and valuation for all properties at 100% of market value as directed by the legislature, with the exception of agricultural and forest land, which is valued on productivity and commodity prices. We also calculate the taxable value by multiplying the market value times the tax rate, which is set by the legislature, to arrive at the taxable value. We do not determine tax amounts, nor do we collect taxes. Your local taxing jurisdictions set the mill rates to cover their budgets, and local government agencies calculate, bill, and collect the property taxes. Property taxes are an ad valorem tax, which means they're levied in proportion to the property's value. The final result of property taxes involves many different entities of government. The Department of Revenue determines the assessed value, the legislature determines the tax rate and any exemptions, and local governments determine the mill rates and special fees. Mill rates fund cities, counties, schools, and special assessments fund things such as lighting districts, storm sewer, street maintenance. According to Montana Code Annotated 15-8-111, this directs the department to value property at 100% of market value. Market value is defined as the value at which a property would change hands between a willing buyer and a willing seller, neither being under any compulsion to buy or sell, and both having reasonable knowledge of relevant facts. In mass appraisal, market value is determined by creating valuation models using sold properties and applying those models to all properties. Further slides will explain the different types of models that we use. Mass appraisal is dependent upon accurate property characteristics, which is the first thing that you should check on our website when reviewing your property value. Again, this is located at mtrevenue.gov. This is also why we come to your property and review the data on record. We also ask that you submit sales verification letters when you purchase a property, again, to ensure that we have the correct characteristics. We need to know what was included in your sale price, such as number of bedrooms, bathrooms, whether the basement was finished or not for that price. Classification is another piece of information on your appraisal and classification notice. Property is classified according to its use and characteristics as designated by the legislature. The different classes of property are taxed at different percentage rates of their market value. There are currently 16 property tax classes in Montana, and each has different tax rates within them. We mainly deal with Class 3, which includes agricultural and forest land, and Class 4, which includes residential and commercial properties. The tax rates associated with those are 1.35% for residential properties, 1.89% for commercial properties, 2.16% for qualified agricultural land, and 15.12% for non-qualified agricultural land. These tax rates can be adjusted if you qualify for things such as an exemption, properties tax assistance programs, or if you've been granted an abatement from the county commissioners. Your local taxing jurisdictions calculate the mill levies they need to meet their budget based on the taxable value that we supply them, with certain limitations that we'll go over in the next slide. When we talk about a mill, 1 mill is equal to 1/10 of a cent. So for every $1,000 of taxable value, 1 mill would equal $1. There are some mills levied at the state level. For example, the 95 school equalization mills, 6 university mills, and 1.5 mills in locations with technical or vocational schools. So to calculate the estimated taxes, let's use those state mills here as an example. If we add those up, it equals 102.5 mills. So using that $1,000 of taxable value again, we're going to take the 102.5, we move that decimal place 3 places to the left to equal 0.1025 or 10.25%. So on $1,000 of taxable value, the tax liability for the state mills would be $102.50. It's important to remember that just because you see a 40 or 50% increase in your assessed value, that does not necessarily equate to a 40 or 50% increase in your tax bill. Budgets and mill levy increases are restricted by the legislature in Montana Code Annotated 15-10-420. Budgets are restricted to the previous year's budget plus 1/2 of the average rate of inflation for the past 3 years, plus any newly taxable value. If the jurisdiction doesn't levy the maximum number of mills in a given year, they can be carried over to a subsequent year. Total mills also included any voted on levies, such as school bond levies and safety levies. These are not restricted because they're voted on by, because they're approved by the voters. In addition, there are specials and fees that are added to pay for services specific to an area or service type, such as fire districts, storm sewer, lighting districts, and fire hydrants. In general, the taxing jurisdictions are required to follow the guidelines, and if they want to increase above this calculated amount, they have to go to the voters and get the approval for that increase. So where do your property tax dollars go? We get this question quite often. This graph is a representation of just that information. The information comes from the department's biennial report, which is many pages long, but can be found on our website, again, mtrevenue.gov. These figures are statewide, and the general breakdown can differ slightly by county. But as you can see, the majority of your tax dollars go to fund your local schools, followed next by the county, and then by the state. The state section here can technically be considered schools because, as we talked about before, all of those tax dollars do go back to the schools. So what I'd like to do is show you this website that I've referred to a couple different times. If you go to mtrevenue.gov, you'll see at the top that there is a link to property information. This is going to be the screen that you see when you click on that link. The first thing I'd like to talk about is under the orange, you have an option to learn more about your property's classification and appraisal notice. If you click on that link, it's going to give you a lot of the information that I'm discussing here today, as well as an explanation of the appraisal notice that you received in your mail. So what I'd like to do is to walk you through this so that you understand exactly what you're looking at when you see your own appraisal notice. Number one is the classification codes. So in this example, we have a residential property. You can see that we have a class code for the land, and we have a separate class code for the improvements. Keep in mind when we talk about improvements, that means any structure that is located on that land. It doesn't mean that you improved anything on your property. It's simply a term that we use to refer to a shed, a garage, your house, any kind of structures that sit on that raw land. Row number 2, is giving you all of the totals. So let's walk through each one of those columns. The first column is the size of your property. So in this example, this lot is 0.25 of an acre, a quarter of an acre. The next column over is the prior appraisal cycle value. So let's talk a little bit about this because it can be a little bit confusing. In Montana, we have 2-year tax cycles. Once we set a value for the cycle, that value remains for 2 years unless changes have occurred to that property. So in this particular example, the value set on this property for 2021 was $302,100. Something clearly changed then for 2022 because the following year, 2022, that value increased to $333,040. So they may have finished a basement, they may have added a detached garage, something changed there. The current assessed value is really what we're talking about today. This is the value that was placed on your property for the current tax cycle, which includes tax years 2023 and 2024. If we move on then to number 5, we're looking at taxable value. Remember that taxable value is calculated by taking your market or your assessed value times the appropriate tax rate. So here, last year's taxable value was $4,078. We arrived at that by taking the prior year assessed value times the 1.35%, which is the residential tax rate, to arrive at that taxable value. Next to that, we're going to see the current taxable value. This again is taking that current assessed value times that same tax rate. Number 6, this is a value increase reason. This was passed by the legislature to give you an idea if your value increased by more than 10%, we are required to put a reason in your assessment notice stating what the cause of that 10% increase is. In this case, and in most cases across the state, it's going to be market appreciation. We have 3 options to choose from: market appreciation, land appreciation, and new construction. Again, we all know what this market has done. And so for the most part, you're going to see market appreciation as your value increase reason. Number 7 then is your prior year millage rate. This corresponds to number 9. What we're showing here is last year's mill levy. Mill levies are not set and released until the end of September, beginning of October. So in the past, this has worked well. We've used the prior year's mill rate to give you an estimate of what you're going to owe for your general taxes. This year is a little bit different because we've seen big increases in those assessed values. So again, keep this in mind that this is not the current mill rate. And what you're looking at in number 10 is an estimate of your general taxes based on that mill rate. We're going to talk about this a little bit more, but remember that truly as taxable value increases, those mill rates should float down. I skipped over number 8, which is your geocode, which is just a locational code that we use. Each property has a unique geocode. This next slide is another option that you have when you visit our website. So let me go back to this screen. Underneath where we saw learn more about your property's classification and appraisal notice, there is an option on the left in the orange that says find property information. When you click on that link, this is going to be the screen that you see. You can use this website and search by your address, by owner name, tax code, geocode. There's a number of ways to find your property on this website. Once you type that in and click go, what you're going to see is all the information that we, the department, has that we're using to get to your assessed value. I really encourage you all to take a look at this. We want to make sure that your property characteristics are correct to ensure that your value then is also correct. You can see previous year's values, you can see your land information, you can see all the characteristics that we have on your property. Again, please use this to ensure that the characteristics are correct. We want our information to be correct so that we are, again, giving you an appropriate value. So let's talk about our valuation process. The first thing we're going to talk about are a couple of important dates. By statute, we assess property as of January 1st of any given year. That means that if you start building a house on January 2nd, that house will not be taxable until the following year. In contrast, if you tear down a pole building on December 31st, again, that will not be taxed for that January 1st tax year. We tax what actually sits on the property as of that date each year. The difference then is the general assessment date, which is the date that we value each property in each new assessment cycle. So when you receive your assessment notice, the value that we have on your property is the value as of the general assessment date. For this cycle, we valued property for the 2023-2024 tax years using cost and sales data gathered through January 1st of 2022. Any sales after that date will be used for the following cycle, which will include tax years 2025 and 2026. All property in the state of Montana, except for forest land, was valued using this January 1st, 2022 date. This is in accordance with Montana Code Annotated 15-7-111. The caveat to our January 1st date is property ownership. That is updated until the department until tax billing occurs, so that if you purchase a property in February, you will be receiving the assessment notice as well as your tax bill. We have 3 approaches to value. The residential is the one that we rely most heavily on in the sales comparison approach. We are able to build very statistically sound models with the large number of sales that we have received over the last few years. We then adjust the property that's sold to the subject property to calculate a value. We also have the income approach, which is most heavily used for our commercial properties. And then we have the cost approach, which is used for unique properties. Basically, we look at what it would cost to replace the property, less any depreciation that the property might be seeing. Next, we're going to take a look a little more in depth at each one of those. The cost approach is a required method in some cases, such as a home that is still under construction and not 100% complete, or properties that include agricultural land that again is valued using productivity of the land and the crop's commodity price. Industrial properties are very unique and typically require the use of the cost approach. So this is how the cost approach works. The department develops cost tables using nationally recognized valuation manuals such as Marshall and Swift and RS Means to calculate the replacement cost new of improvements. We then apply depreciation and in some case apply multipliers to replacement cost new less depreciation. We then add the land value to arrive at a complete market value. The department not only develops the cost tables, we also develop the depreciation tables, and those are updated every tax cycle. When I talk about the multiplier, there may also be a multiplier applied to the cost value by comparing sales prices with cost values to determine if our costs are falling in line with what sales are predicting values to be. If they're not, this factor is applied to the cost values to bring them in line with the sales. In some markets, this could be an increase in the cost amounts as the costs are not keeping up with the sales prices. In others, it may be a decrease where our cost values are higher than what the sales would predict a property could sell for. The next is the comparable sales approach. Because the state of Montana is a non-disclosure state, when property sells, a realty transfer certificate is required to be provided when a deed is filed with the clerk and recorder's office. This form gives the department the ownership information as well as the sales information, and this sales information is required by statute to be kept confidential. We then use this sales information to create models for land valuation as well as the sales comparison approach to value. We first verify that the sale meets our definition of market value. That means, was it offered on the open market? Was there a willing buyer and willing seller, and neither was under any duress to enter into the agreement? Again, we also make every attempt to verify that the property characteristics are correct via that sales verification letter. For residential property, multiple regression analysis is used, which means that we take the sales price as one dependent variable and then add multiple other variables and characteristics such as square foot of living area, basement size and finish, quality of construction, year built, condition, and other amenities such as garages, decks, and open porches, and assign them a value based on the sales in that model. In the end, we use 3 to 5 comparable sales that are statistically selected for each subject property based on how comparable they are, and adjustments are made for the differences in the characteristics between the subject property and those comparables. If you're interested in learning more about this or taking a look at the comparable sales used to value your property, please visit with one of your local offices. There are appraisers that are happy to sit down and walk through this process with you. The final approach to value that we use is the income approach. The department mails income and expense forms to commercial property owners across the state who self-report. Again, by statute, this information is kept confidential. We are looking for income and expense for the operation of just the property itself. We are capitalizing the property's net income into a present worth of market value based on the future income streams that the property can produce. We are not looking for the business income. We're not valuing what is going on inside the building. We are valuing what the building could be rented for and the associated building expenses. Multiple models then are built using that data received from this mailing. When we then use this information to build income models for 8 primary commercial building types that include apartments, hotel motel, retail, office, restaurant, mini warehouse, and mobile home parks. We only have 8 primary building types because we simply don't have enough data to build models for something else. In those cases, we would use the cost valuation method for those values. We then estimate the market value by determining a net operating income for the property and applying that property type cap rate to determine the present worth or market value of the future income stream of the property. Now let's talk about some important dates. Now that you've received your appraisal and classification notice, the first thing that I would ask you to do, again, is to go to our website and make sure that our information is correct. If it's not, again, please visit with an appraiser in your local office so that we can make sure and correct our records. If you'll notice, your appraisal notice is dated. Most are dated June 30th, 2023. If you don't believe that the value that we have on your appraisal notice is correct, you have the option to file what we call an AB 26 or an informal review with our office. That must be submitted to your local office, postmarked or emailed no later than 30 days from that assessment date. So if your assessment date is dated June 30th, then it would be required to be returned by July 31st, 2023 to be applicable for the 2023 tax year. If you miss that deadline, your appeal will be worked for the 2024 tax cycle, and the deadline to submit for that would be June 1st of 2024. I really encourage you to work with your local offices before filing this review. Again, we want to make sure that our information is correct as much as you do. If you decide then to go forward with submitting this form, the process is as follows. An appraiser will reach out to you and ask if you want to be present for the property review. We go out, we review every property to make sure, again, that our information is correct. You're welcome to be at that review. We do not want to go into your house. We review everything exterior. If you would like, though, we're certainly happy to come in if you have something in particular that you would like to show us. But otherwise, everything is done from the outside. We will then process your AB 26 form and send you a letter letting you know the findings of that appeal. If at that time you're unhappy with our findings, you have the option to appeal then to your county tax appeal board. You have 30 days, again, from the date on that letter to appeal to the CTAB. You will then go in front of your county tax appeal board and present your information as to why you believe that your value is incorrect. Again, you'll receive a notice from that board letting you know their decision. And if at that time you're still unhappy with the results, you then have the option to appeal to the Montana State Tax Appeal Board. So there are a couple questions that we receive quite often that I'd actually like to cover right now. Hopefully they'll answer or clear up some of the things that you've been wondering. The first one is, are my taxes going up? And the simple answer is not necessarily. Keep in mind that we've all seen major increases in this market. So the taxable values are increasing across the state. Remember that mill levies should then float down to account for this difference. We will not know what your actual taxes will be until mill levies are released. Again, that won't be until late September or early October. The next question is, I haven't made any improvements to my home, so why is my value increasing? We kind of talked about this a little bit earlier. That term improvements is just that. It's a term that the department uses to describe any structures that sit on your property. So again, you may not have changed anything on your property. This is likely just an increase reflecting what this market has done. Another one is, why did my value go up more than my neighbor's value? We hear this quite often. Remember that we select comparable sales based on each of the property characteristics. And due to any slight difference between you and your neighbor's property will generate different comparable sales properties for each house, causing a different valuation. We may have selected different variables to compare houses with, and the amount of those variables will change each cycle as well. What is important is that we have your property characteristics correct so that the adjustments we are making are reflective to your property. Let's talk about trespassing. We've had people ask, can you trespass on my property? I would refer you to Montana Code Annotated 15-7-139 that does actually allow us to be on the property for appraisal purposes. We are certainly not trying to intrude on your personal space. We, again, are just making sure that our records are correct. You do have the option to request that we give you a call before we show up to your property. Again, we do have that information. There's a form you can fill out on our website or contact your local office if you'd like more information on that. Another question is, are you valuing my home as if it were located in a high growth or value city? And the answer is no. We build models specific to counties and break those down into areas. Now, in your more rural areas, we have very few sales. And so there may be rural places where we're using a larger area to develop a model. However, I can speak for Yellowstone County. We have broke down this county into multiple locations. And again, we're using sales that occur in specific areas as comparables for your property. So we are not looking statewide. We've broken this down very as close to your particular area as we can. So next, let's talk about something really positive. The legislature and governor signed 2 tax rebates for 2023. The first is the income tax rebate. This is a rebate of up to $1,250 per person or $2,500 per couple filing jointly. Sit back and collect your money. The department will use your 2021 income tax filing to send out rebate checks based on your tax liability. If your tax liability was something less than $1,250 or the $2,500, you will get that amount back as your rebate. There are also some requirements based on your residency for previous tax years. Again, there's additional information on our website relating to this rebate. The other rebate is the property tax rebate. This will require some input from you. Starting August 15th through October 1st, you will need to file for this property tax rebate. The rebate will be granted for 2 years. The first will be based on the amount of property taxes you paid on your primary residence for 2022. If you paid at least $675, that is the amount that you will get rebated. If your property tax liability, including special assessments, was less than $675, you'll get that lesser amount. There are also some residency requirements for this rebate as well. And again, more information is located on our website. So at this time, that is the end of my presentation. It looks like you've all been asking questions and getting those answered, I hope. I would like to thank everyone for being here. Again, I would really encourage you to work with your local offices for any additional information or questions that you may have. We are more than happy to help you at any time. Thank you.
Hey, thank you, Paula. That was awesome. Yeah, we've been working really hard to keep up with everybody's question and answers. We're trying to get those answered as quickly as possible. Were there any that, for our panelists, were there any that we saw that should be answered live? And as you know, we will be leaving the question and answer open longer than the presentation, just to make sure that everybody has ample time to type out those questions so they can get their answers with the professionals that are sitting there right now that have all the answers for you. So we will be hanging out. Hey, Dan Harding, you have your hand up, and I allowed you to unmute.
Okay, thank you. I was trying to understand the last frame that she showed on the property tax rebate when it mentioned up to $675. Is that based on the amount paid in property tax, or on, for example, if we've paid over $2,000 on a property in property tax, we will receive $675 rebate, or is it contingent on other principles, other factors?
So Bryce Kotz might be the best one to answer that. Bryce, you want to unmute?
Yeah, absolutely. Yeah, so the property tax rebate is up to $675, and it would be based upon the amount of property taxes you actually paid in tax year 2022. So if your tax bill on your primary residence was $2,000, you would be eligible for the maximum $675 rebate. If you were in a situation where you paid less than $675 in property taxes for tax year 2022 on your primary residence, that would be what you would be limited to receive in the rebate. So if your property tax bill was only $400, that's the maximum rebate you would be entitled to. But if your total property tax bill on your primary residence was over $675, that's the cap, the maximum limit of a rebate you're eligible to receive.
Okay, and strictly on primary residence, does it apply to rental residential properties?
Yeah, the rebate only applies to someone's primary residence. It does not apply to rental properties or commercial properties or any other property outside of someone's primary residential property.
Okay, all right. Thank you, Bryce.
All right. Thank you so much, Dan. I'm actually going to unmute Allison. Allison had some questions about ag, I believe. So Allison, you should be unmuted now if you'd like to ask your question.
Yes, thank you. Thank you for doing this. But also I just typed it in, but I was just curious how we got to the 2.16% for qualified ag land.
Yeah, I can, as kind of I think was covered early in the presentation, the different classifications and tax rates for those classifications are set by the legislature. So at one point in time, the legislature just determined that 2.16% was going to be the tax rate for qualified agricultural land.
Okay, so that doesn't change at all then?
That would only change, just like the other percentages for the other classes if the legislature decides to change it. There is no adjustment from reappraisal cycle to reappraisal cycle. That would only change if the legislature decided to make that change.
Thanks, Bryce. Allison, does that help you out? All right, Jan has her.
Yes, thanks.
Yeah, you bet. Thank you. Jan has her hand up, and Jan, if you want to unmute yourself, Jan Lombardi.
Here, yeah, thank you.
Hello.
I have a question that a friend of mine asked me, and I wasn't sure how to answer it. Her son is he's a Montana resident, and he's a first-time home buyer. So how does it work for him with the rebate that you were just talking about?
When did he purchase the property?
Just this month.
So if he just purchased the property and it's his first home that he's owned, he would not be eligible for the rebate for this year, since he did not own that property as a primary residence for tax year 2022. So this year's rebate is the rebate that you will, or people can apply for starting mid-August, is for property taxes paid on a primary residence in tax year 2022. The same rebate will be available next year, and that will be for property taxes paid on a primary residence for tax year 2023. So he may be eligible to receive the rebate next year. He just won't be eligible to receive the rebate this year.
Okay, so maybe next year. Okay, and how was this set? It's 7 months or something like that. How does that
yeah,
work?
so the definition for the rebate of a primary residence is a property that you owned and occupied for at least 7 months of the year. So depending on when he purchased that and actually took ownership and started residing in it as his primary residence for 2023 will determine whether he met that 7-month threshold to be eligible next year.
Okay, so most likely not. That's too bad. Was that was that a decision then? Because usually the first time home buyers need the most help.
Yeah, that was all outlined in the legislation that was passed that authorized those rebates.
Okay, and then one other rebate question too. So I know I got a postcard in the mail with a link and stuff, but I'm thinking about, you know, all the people that won't have access to technology. Or, you know, how's that going to work to get the money, to get the rebate?
Yeah, so for the property tax rebate, if someone doesn't have access to a computer or the internet, they have a couple different options. They can come into one of our local field offices located throughout the state, and our staff will be there to assist them. Basically bring our computers out and help them file those rebates. They can contact our call center, and I think our call center folks will help them get their rebate filed. So there are some different options available for those that don't have access to a computer or the internet. They can either visit one of our field offices or call our call center here in Helena. And I believe there is going to be a paper application process as well that they could.
And where are the field offices then? Are they located in small towns and stuff like that too?
So
we live in Sealy, for example. So I'm thinking, like, how would I get from Sealy to an office?
Yeah, so at the beginning of the presentation, and I think there was a link shared in the chat that has a map of where all of our local field offices are located and the contact information for them. Or if you called our call center, I'm sure they would be more than happy to mail you one of the paper.
To figure out how to get the paperwork. Okay, all right, thank you. I appreciate your time.
And the slide that is up as the background is our region. It is our map, so you can see where we are, and you can see the phone numbers. All right, so I believe Dan has another question. Let me get him unmuted here.
Okay, thank you again. I had a question on the slide that was shown earlier, comparable sales approach. On point 3, when it mentioned that the department builds models using a sales database, prices of similar properties, 3 to 5 comparable sales. Is it possible for us to view what comparables were used to assess our properties?
It sure is. You can come into our local field office and we can have you sit down with an appraiser and they will go over those comparable sales. That information is confidential, so we do have a confidentiality agreement that we would need to have you sign, and we can sit
Okay.
down and show you what those comparable sales are that we used.
Okay, I appreciate that. And if suppose a property owner feels that a comparable isn't a like for like comparison, is that something that can be considered, or is that pretty much set in stone?
It can be considered. We can look at different things. The way our system works is it will find the most comparable sales as far as we have a point system that we use to determine what's comparable, and we select things that we believe should be considered: location, year built, quality of construction, all those types of things. We're trying to find the most similar properties that way. So if you find one that you don't think is comparable, we could try to replace it with a different one and see how that does in the valuation. So work with your appraiser. We can talk about different ways that we can look at other sales. If you have sales that you want to bring in, we can put them in and see how they perform instead of the ones that the system has selected.
Okay, all right.
What if you can't go in physically to the office?
Oh,
because you're not in the country right
yeah,
now.
I'm in Mexico at the moment. Is that something that can be done by phone or by video call, such as we're doing now?
We could try a video call. Yeah. Where are you located, Dan?
I'm in Jocotepec, Jalisco, Mexico. Our properties are in Flathead County.
Okay, let's get your contact information and we'll have someone in Flathead County reach out to you.
Hey, Robin.
Okay.
If Dan is located on a beach, I volunteer to go down there and help him out. I would just do that for the department. So I volunteer.
Take one for the team.
Exactly. Take one for the team. Me and Dan are going to hang out. So we have Lombardi 409 has their hand up.
Hello. Can you hear me?
Yes.
My question is, these residential property appraisals went up statewide, what, about $60 billion according to the Department of Revenue, over the 2-year cycle. And normally the legislature cuts that residential property tax rate, which is at 1.35%, and to make it revenue neutral. And it looks like they didn't do that this time. The legislature and the governor didn't do that this time. So it went up basically 43%, and the state pocketed about, with the 101 mills, about $81 million. So that's a statewide property tax increase to Montana homeowners. Is that correct?
Yes, that is correct.
Okay.
So what the department does or is required to do is each November prior to the legislative session, we provide the Revenue Interim Committee with an estimate of what we expect property values to do and what the tax rate would need to be adjusted to remain taxable value neutral.
Right.
And then from there, it's up to their purview as to whether they choose to change those tax rates or not. And for whatever reason, they decided not to do that this reappraisal cycle.
Do you know why they didn't do that?
I unfortunately do not have any insight on why the legislature chooses to do or not do anything.
Does anyone in your department have insight into that? They should have insight into that to understand how policy is made, correct?
Again, all we do is provide them with the information. I don't know that anyone within the department has any insight as to why or why not they decided to
Well,
not.
Well, I would think they would. I would think they would, since they're professionals in this arena. So I think that's why a lot of people are confused about these appraisals and seeing potential property tax increases, is because the state essentially raised the portion 43% or $81 million. And a lot of the local, governments are getting blamed for raising taxes. So I hope that the department can help clarify that to homeowners about where the onus is, the responsibility is for some of these increases. So I would hope the department would clarify that in these meetings that are being conducted around the state. Can you do that?
Yeah, it's part of the conversation we try to have, is that, there's the state portion that doesn't float. So people will see a slight increase from those state mills not being adjusted. We just try to emphasize that if you saw a 40% increase on your assessment, that your taxes will not be increasing 40%.
Right, because that's proportional with state and local. But I just hope that the state can help clarify these issues as you go forward, because it is very confusing to the public who doesn't pay attention to property taxes. And it's a big deal. That's 81 million, 162 over the biennium. That's a lot of money going back to the state, and that really hasn't been, to my knowledge, communicated to the public so far. And who's responsible for that tax hike? So I just would hope that the department can help clarify that in future meetings. Thank you.
All right, thank you. All right, and we've been keeping up with all the questions. I don't have anybody's hand up. Corey, I believe all you have to do is unmute yourself. You're ready to rock. You're unmuted, Corey. Corey, are you having audio problems?
I think I am. I tried unplugging something. Can you hear me now?
Yep, you're on now.
Awesome. Thank you. Sorry about that, everybody. And thanks for the great questions. My name's Corey Hofflin. I'm the division administrator. Just back to that previous question, just a little bit. As Bryce alluded, we do report to the Revenue Interim Committee the November before the session. Two things have occurred as of late. Number one, we went to 2-year reappraisal cycles to try to more accurately reflect and get values sooner to taxpayers. So there's more transparency there. The other issue that they run into when they consider going to revenue neutral rates is you push the burden, or you shift that tax burden to other classes of property. And that's something that they give a lot of consideration to before making that change. So I think those two things also played into their decision not to go to a revenue neutral rate.
Awesome, thank you. All right. We do still have question and answers coming in, so we will leave that open to try to make sure everybody's questions, we're trying to dogpile those and get those answers out as quickly as possible. And we appreciate you folks taking the time out of your day today to hang out with this presentation. It's a lot of great information, especially if you're new to this whole process. And we appreciate everybody, all the panelists and presenters who are on today to make sure that we get those those questions answered. So thanks to everybody. And also, we do invite you to check out our website and find out just all the places that we still have lined up to go and do a live presentation of this exact same information, but it's going to be in a live format. So if you'd rather sit in a gymnasium or a library or wherever we were able to get high school auditorium, whatever, come out and hang out with us and see it in a live presentation. Those are all listed on our websites, and you can find out where we are in the state. And we'd love to see you. And we will have people hanging out, appraisers on site that can help you maybe get some one-on-one attention. So that is available as well. This is kind of a plug because this is my area of expertise. We do have social media. So please find us on Facebook and follow us. We are putting a lot of the upcoming events. We advertise them on Facebook. We have even some of our job openings. We might have some job openings in your areas, in your local areas. And we put them all on social media. So please go out and find us and follow us and like us. And we'll get you the latest, greatest information through our social media. And don't forget, on our website, we will have an FAQ section so that when we see questions, we put those on the FAQs so that future Zoom presentations, they can see what the questions asked are. And anybody who goes and sees our live presentations, they can see what other people are asking, both in past Zoom presentations as well as like this presentation. So. All right, so like I said, we are going to leave the question and answer panel open a little bit longer, but for the rest of you, there won't be any more presentation. We'll just be answering questions. So if you have to get out of here, if you have to get back to your normal life, we understand, and so that is available to you. But we are going to hang out and allow people to ask more questions, and we're going to try to get those pounded out in the question and answer panel. But I understand if people have to get out of here as well. So. Completely up to you guys. We're hanging out. We're answering questions as quickly as we can have them coming in. So thank you for your patience on this. Hey, Dan, I had sent you a chat, and it was a private chat, and it was just asking you for contact information. We were going to reach out to you and see if we could help you out. We realized you're in Mexico and all that stuff. So if you want to figure out a way to get us your information, that'd be awesome. If you look at your lower panel, I believe you'll have a chat from me specifically asking for some contact information. If you answer that chat, it'll go to just me. It won't be broadcasted on the whole Zoom
Okay.
chat. So
Okay,
but-
I'm actually Terry, his wife.
Oh.
He stepped out of the office for just a minute,
cool.
but we do have a Montana phone number.
Perfect.
that-
So look at the bottom rail of the Zoom presentation, and you'll see a chat down at the bottom, and it should have like
Yeah,
a red number 1. That's from me, and it's saying, hey, what's your contact information? If you just answer that chat with maybe a phone number or whatever, we would like to get a hold of you and maybe answer some of those more specific questions that maybe not that are more specific than what we want to do in a Zoom presentation across the world. But so you can answer that. You can answer that chat. Otherwise,
I'm not as, I'm sorry, go ahead.
if you're not techie, write down my office phone number. It's 1-406-444-6700. After this presentation, you can just call me and I'll write down all your information and get it to people. But we just want to make sure everybody gets the help they need. And we realize that.
I see your chat to us.
Cool.
Dan did just step back in the office. I don't see where I can put the reply though.
Well, that's
This is
okay.
done.
You could just call me. That's fine.
Okay, we'll do
Just
that after it's
after the
over.
Zoom presentation, just give me a call and I'll make sure that someone ends up with your
Okay,
oh,
Thank you so much.
so actually Holly Dale just put in the Kalispell office number. That one would be better than myself, because you'll notice how many questions I've been answering, which is 0.
Yeah.
Because I'm good at passing off questions. So I would hook up with Holly Dale. She put her information in the Kalispell office. That would be the fastest, best way. But we just want to make sure that you get the help you need.
and her name is Holly Dale.
Holly Dale. Yeah, Holly Dale. And it's in the question and answer panel right now. So
Okay.
if you've been watching other people's questions, it is in there, and you can call the Kalispell office and they will get you, the information, and then they'll, just have some conversations with you and make sure you're on the right track.
Thank you so much.
Hey, thank you guys.
Uh-huh.
What? You don't have to share anymore. Paul, what are you doing? All right. So we still have some question and answers rolling in. Paul, if you don't want to, you don't have to be sharing your screen anymore. Right on. Once again, we will have more presentations coming in local areas. I believe we still have some more Zoom presentations as well. We have 2 more Zoom presentations as well. Those are all listed on our website if you'd like to attend those. Maybe we went through this presentation and you forgot to ask a question, or maybe you went home and looked at your stuff and you learned something and now you want to ask another question. We will be here again and have 2 more presentations in this Zoom format. Otherwise, maybe we have one in your local areas and you could come down and hang out with us and meet us face to face. That'd be good too. Jamie has been trying to keep up putting in the links into the chat, and she's going to have the link to the town halls, and you'll be able to see those coming up. And we welcome you to come and hang out at another one. We always like that. We kind of have a slowdown of some of the questions. We might be tying this up in about 5 minutes. Once again, we want to be available to you folks to answer those questions, but we also know that you guys have lives too. All right, we'll leave the question and answer open for about 2 more minutes, folks. All those questions are kind of winding down. Dan's saying some nice things. Thanks, Dan. Although it could be your wife. You guys are double teaming the Zoom numbers today. So, but thank you for your input.
No, it was very well done. We really appreciate it.
Thank you.
Thanks for all
Awesome.
your
Thank
time
you.
for everyone involved.
Thank you. About 2 minutes, then we'll shut it down. All right, folks, we'll wrap this up. So thank you guys once again for coming out and listening to this presentation. Thank you to all the panelists. Thank you to all the co-hosts. Paula Gilbert, thank you so much for doing this presentation. This has really been a great presentation, and I hope that everybody got the answers they're looking for, at least to understand it, you know. But please reach out to us, find us on social media. Please find our offices if you need to get that help. Make sure you call, make sure you email. We have a call center. Make sure you get the information you're looking for. This is not something that we want you to do in the dark. This is not something that we want you to do alone. So please reach out to us. We'll be available to you. Other than that, thank you so much for being with us, and we will see you next time. We do have 2 more Zoom presentations coming up. Please find us on our websites and find out and get in those Zooms if you want to, and we'll see you there. Have an awesome day, and have an awesome day. Do whatever you got to do, and we will see you next time. Thank you, folks.
Bye-bye.